In news out just today, the S&P 500 cuts most of the losses on tariff hopes. In today's video, we're going to look if the fear is over or things are just starting to get nasty. But first, let's look through how the markets have responded in the past 24 hours. And then we'll get into the news. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you in becoming more of a financial and emotional blessing to yourself and those you love through positive excellence. If you like the content, please smash that like button and don't forget to subscribe. We have one of the best communities on YouTube. We look forward to welcoming you into our global family. There are a lot of free resources on ctksmethod.org. The link is in the description of this video. Let's see where the markets are going in the next 24 hours. And let's run the numbers. I would like to thank all the people who have reached out and joined me on LinkedIn. And the link is in the description of this video. Please reach out. You can directly message me at any time. And I have been posting updates into X about how to understand what's happening inside the market and a variety of different things. There's a lot of alpha, absolutely free of charge on LinkedIn that I'm posting. If trade wars escalate, there is a mounting concern over a retracement in the stock market. And analysts are already slashing US earnings forecasts. Before we get into it, how do tariffs actually work? To understand tariffs, we have to understand different geographic regions or different markets. Take, for example, if this is the US and this is Mexico and this is China and this is Canada. In other words, all the different boxes represent different countries. If the US says to these specific countries, hey, I'm going to whack a 25% tariff or a 10% tariff, that is a tax on the goods that flow into the US. The tariffs are enforced by Customs and Border Security, with the tariff money being flowed into the Treasury Department's General Fund. Tariffs are currently less than 3% of federal revenue. And if those tariffs were imposed, it would translate into $1.1 trillion worth of additional cost for US importers in the next decade. In President Trump's first term, and then Joe Biden, the taxes or tariffs on China raised $77 billion in annual revenue. Tariffs make everything more expensive. If the business can pass on the cost to consumers, it will. If the importer has a weak relationship with the exporter, they will absorb the costs. One thing to understand, tariffs alter the flow of goods and services right around the world. Businesses can get really creative and do tariff evasion. Basically, they ship their merchandise through a third-party country that is not subjected to the tariffs. Throughout the world, people have been moving away, governments have been moving away from tariffs as a form of punitive damage. They're akin to a sanction. And the US may say, hey, Mexico, I'm going to put a 25% tariff on all of your tequila. And Canada, I'm going to put a 25% tax on your exports to us. And Mexico and Canada say, hang on a second, that's not fair. I'm going to put a tariff on your stuff as well. This leads to tariff wars. And what we've seen recently, even though Mexico and Canada backed down and accommodated the US, China is unlikely to do so. And when it comes to that, it's not just about Mexico and Canada and China. It's also about the EU as well. President Trump is really going for it. So let's look through the news. Tariffs are making the front page news today, and it's all about China. In response to a 10% tariff that President Trump placed on China, President Xi Jinping has come out with his own hitbacks. PVH Corporation, the owner of Calvin Klein, has been put on a blacklist. Export controls have been placed on 5 rare earth metals, primarily used in defense. 10% tariffs have been put on tractors and functional vehicles, 15% tariffs on coal and LPG, liquefied natural gas. And China launched an antitrust probe into Google. President Trump originally went with a 10% tariff on China, but he actually wanted to make it 60%. And you can see here a list of goods subject to the 15% tariff increase, a lot of coal. And what about the 10% tariff increase? You can just pause the video if you would like to focus in on any of these particular things. But of course, this response is just the first response in a long line of responses that are likely. And there's a lot of things that are covered here. So far, the response from China has been quite targeted. And the thing to remember, President Trump literally wanted to raise it to 60%. He started with 10%. As I was saying in yesterday's video, this is far from over. And also the EU is getting involved. The markets got very jittery when Mexico and Canada got hit with tariffs. And of course, China has seen some volatility inside the market, and it's really early days yet. But wait, there's more. Just like that favorite salesman that you see on late night TV. Yeah, there is more in this tariff war. Hence, is the fear just getting started, or is it over? The EU sees a path to negotiate with Trump to avoid a tariff fight. Many people don't think the EU is on the radar. It is. And Trump said this week that the EU duties, in other words the tariffs, will definitely happen. The US is likely to target steel and aluminium exports. That is likely to happen next month. In 2018, the US hit nearly $7 billion worth of European steel and aluminium exports with duties. In response, Harley-Davidson and Levi Strauss jeans were hit. In 2021, the two sides, the EU and the US, agreed to a truce. The EU froze all of its restrictive measures, but the US quotas that replace the punitive duties will expire at the end of this year. The EU suspended tariffs on about $3 billion worth of US products, and they're set to snap back at the end of March. But those are likely to gain an extension. What we need to do is to look at the cheat sheet, and if you go to ctksmethod.org and scroll down, you'll find an area just down here on Mastering Price Action. Mastering Price Action, this cheat sheet is the cheat sheet that we're talking about, all of the different rows. And to understand the cheat sheet better, there are a range of videos that can help you out. Even though the news says, hey, boy oh boy, there's a trade war a-brewing. We need to look at how the markets are actually reacting. Let's do that now. Row 1 of the cheat sheet is the VIX, the DXY, the US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. What we can see is the VIX absolutely took off when the unexpected tariffs were just released across the weekend. On the first day of trading, oh boy, the VIX spiked up and spiked up substantially. That brought this blue line down. Now, what is this blue line? That is Bitcoin. So you can see that Bitcoin literally fell from 106 down to 92,000. This is the problem when the fear gauge rises in the market. And this is why I always do that standard introduction, showing you the heat map of the stock market, the fear and greed index. For masterclass students and students of the Profiting course, you absolutely understand what I'm doing. Especially the Profiting course. What we're seeking to do is to understand how the inversion of the VIX plays into stock market price. Now, what we're seeing, now, why did I say stock market price? Why didn't I say crypto price? Because we know that Bitcoin and the stock markets tend to move as one. They have very high directional correlation. So what is this actually showing us? The VIX and the DXY are the two things that you need to keep your eye on in terms of row 1 at the current time. When I invert the Bitcoin chart, what I'm actually doing is just showing you directional correlation. A lot of people say, oh, it has to overlay perfectly for there to be a correlation. You need to ask yourself, why does it need to be perfect? It just needs to be there. We just need to understand which direction things are going. So as we saw the VIX spike up, Bitcoin absolutely decayed. You'll have a lot of people inside the crypto market saying, oh, Bitcoin, 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 and not looking at the VIX. This is a big mistake. It's an amateur mistake. And what about the US dollar? When we invert Bitcoin, what are we seeing here? There's a slight divergence at the current time. Or is there? Is there a real divergence, or are things just aligning and over and under extending to a degree? What we're actually seeing here is that Bitcoin is pricing in the risk of an escalation of the trade war. So therefore, Bitcoin is coming down now because it operates 24 hours a day, 7 days a week. It is very risk sensitive. This is what I see when I look at the row ones. There was an article that said things are getting better, things are recovering, and certainly we did get a little bit of a bounce in terms of row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. Junk bonds doing this bounce was kind of good, but the markets were yet to make a decision. Note that it didn't recover back to this point. It was actually quite weak. And with the news of the EU potential sanctions coming, also China sanctions are not 10%, they were meant to be 6 times that amount, 60%. The potential for a global trade war, it's on, baby. Bitcoin is the canary in the gold mine, or coal mine. Yeah, it needs to be a coal mine because of all those gases. And what we can see is as it is coming down at the current time, we would anticipate that the DXY, the US dollar currency index, would strengthen, the euro dollar would come down, the Aussie dollar would come down in the next 24 hours. We would also anticipate that silver and gold both retrace. Note this, when you look at Bitcoin and you look at gold, look at that directional correlation. It is not perfect, but it is there. What about silver? We can see the same kind of correlation playing in. They are not perfect correlations, but they do give us an idea or a concept of where things could go. And when we look at the index futures, we can see that the Russell 2000 did a fairly good job of getting over that particular hump. But it's pretty much early days. If you're just looking at the news and making your buy-sell decisions based on the news, please don't do that. You need to look at the structure. At the moment, we're looking at directional correlation and momentum, but you must look at structure. Many people inside the stock market say, oh, Bitcoin and crypto and the stock market, oh, they just don't relate. Coming from a finance background, studying finance at university, I can certainly see their point. Nobody likes change. People just don't want to see new things. After all, they're scary. But scary can be good if it gives us an insight into what the major markets are potentially doing. We can see the S&P 500, it was recovering, but the crypto market is declining at the current time. Crypto is incredibly risk sensitive. A lot of the companies that make up these major indices, they're so big, they don't move the index as much as it should move. The only thing that we can see here is a point of difference between the Russell 2000 and crypto. Therefore, we need to look into the futures. When the tariffs hit, the futures just sunk, and you can note this directional correlation. The S&P 500 futures are indeed coming down. What about the NASDAQ futures? They're coming down. There's a retracement underway. The Dow. But we're seeing inside the Russell, there is a divergence. This is a good thing to see because the Russell 2000 and the crypto space are literally quite tightly correlated. You'll need to keep your eyes on this. But you can see global stock markets, for example, the DAX in Germany, the Nikkei in Japan, the ASX in Australia. You do need to pay attention, and of course the Hang Seng in China. But these stock markets all open at different times of the day. Bitcoin is 24 hours by 7 days a week by 365. What I love about the crypto market, and that's where I focus literally exclusively these days, after nearly 4 decades inside financial markets, if there's going to be a sell-off, something like this, we can detect it inside the crypto market and take corrective action. We don't have to wait until all the fat cats on Wall Street have dumped their bags on retail. If you want true financial freedom, it does come at a cost because the crypto market is very volatile. But you can see here that the association between the stock market and crypto is absolutely quite solid. And that solid relationship also applies into Forex as well as commodities. Looking into row 4, which is Apple, Tesla, Microsoft, and Nvidia. And we're going to throw MicroStrategy inside row 5 into row 4 because it just helps with the scaling of these charts. We can see that when the tariffs were introduced, Apple fell like a brick and it was slowly recovering. And what about Tesla? Boom, it fell. Now, what does this mean to us and what does it mean to you if the trade wars start to escalate globally, as it looks like they will do? Well, we need to be prepared for more juicy bargains. Remember, all the markets move as one. Your favorite influencer who just looks at one chart and tells you the meaning of the universe is contained in that chart is absolutely incorrect. You need to do the cheat sheet before you do any trade or investment. That is, if you want to make money and keep it. And the cheat sheet is completely free. So when we look at total crypto market cap, which is row 5, as well as Bitcoin and Ethereum, what are we noticing here? Bitcoin and total crypto market cap. Yeah, this is this risk-off sensitivity that the crypto market has been exhibiting. The sell-off inside total crypto market cap, in other words, the alts plus Bitcoin, has been literally brutal. But if you were doing your cheat sheet, you are probably just paring back on your market exposure or buying BORSOG or 10-5-10 levels, as a lot of the community are. Now, what do we notice about Bitcoin at the current time? It is selling down. We'll look at Bitcoin structural levels in a moment. Ethereum, what do we see there? It's getting pulled down. Now, when people are new to financial markets, they see all of these charts and they think they're all separate. They're all different. They are not. All charts move together. Inside row 6, we can sniff out additional weakness or recoveries of strength. That's why looking at row 6 and row 7 and looking at the memes, it's really important because these can point to turnarounds inside the market. So when we look at Litecoin, yes, it's following Bitcoin's gravitational pull. Bitcoin Cash is also. Binance Coin is coming down, and Ethereum Classic is also coming down. This all depends on Bitcoin structural levels. One thing to note, that the crypto market has a high proportion of retail traders and investors, and retail investors are emotional traders. They will get pulled in by a lot of really good news and see their favorite investment dumping and decide to sell. That's emotional trading, it's not investing. If you're investing, you're going to hold on no matter what. But if you're smart, you actually look at intercorrelation, interconnection, and structural dependence, and then you do your investments. Why? Why do that? Why not just hit the buy button and just hope like hell that it goes up? Well, that's not the way the financial markets work. When we look at row 7, we can see ADA following Bitcoin's gravitational pull, Solana coming down at the current time, Doge also coming down, and XRP coming down as well. Everything hinges on Bitcoin's chart, and Bitcoin and total are intercorrelated as well. It was an amazing thing that we saw with the tariffs being introduced and the VIX spiking, the DXY spiking up, which brought the markets down and the major stock market indices down as well. In this recovery, we saw double-digit positive growth. So if you can BORSOG correctly, what's BORSOG? Buy on red, sell on green. You're going to do incredibly well. And thank you to all the people who have been connecting with me on LinkedIn. It's just wonderful to see you. So we can see when we look at the memes, Doge came down and recovered quite well. The memes, because there's a lot of retail inside the crypto market, looking at the memes is a great idea. It's not a dumb idea. It's a great idea. And a lot of these memes have seriously high liquidity on them. Pepe is one. And of course, Doge and SHIB are two more. A lot of people will be saying, oh, the Department of Government Efficiency, Doge, headed by Elon, which is all about Doge. Just wanted to say that. They'll say, oh, Elon just shut down the department. He wanted to shut it down. And some other senator said, oh no, we're going to disband all of those things. And that is why Doge came down. Hopefully you can see just in a very short period of time, that thinking is nuts. The markets are highly intercorrelated and interconnected. Doge cannot escape Bitcoin's gravitational pull. If Bitcoin is going up, Doge is going up. If Bitcoin is going down, Doge is coming down. In a post that I put out on X yesterday, I was talking about the key levels that you needed to look at in terms of Bitcoin. And if we lost certain levels or we gained certain levels, certain things would happen from a bullish or bearish stance. What I'm going to do is to put on the structure. One of the things that you will see a lot of people talk about, they will basically say, oh, the buy level is here, the sell level is here. For example, the truth is that we already know what all of the buy and sell levels are in advance. That's why we don't spend a lot of time saying, oh, the support is here, the resistance is here. Across all of the tiered charts, in other words, all of the rows of the cheat sheet, you have an indicator which gives you all of the buy-sell levels. For example, on gold and silver and oil, Bitcoin, Total, Ethereum, Solana, XRP, all of them. So that's not really our focus on a day-to-day basis because those levels are accessible 24/7. You can literally just download them to your TradingView, add them, and bang, you've marked up your chart with level 1 and level 2 standard certification. What I was saying on LinkedIn yesterday, if we get a sustained movement above the 99,534, we will get positive bullish momentum. But we can see we got above, it failed. We got above, it failed. We got above, it failed. And then it failed here. That was the key that I was saying to everybody on LinkedIn yesterday. You can check the post out for yourself. It's the 98,384 level that we have to keep our eye on. If we lose this level, it's likely that we'll structurally overshoot the 96,493 and come into this zone, which is called a gravitational well, that will play out between 93,432 and 94,574. When we had the big sell-off, we cut through a lot of different structural support levels because there was so much panic inside the market. Panic can see an overshoot, but that overshoot quickly turned into a rebound. That's the impact of gravity. So at the moment, if we're starting to get a bit of a negative movement, just keep your eyes on this 93,432 to 94,574 level. Going back to when the VIX was spiking upwards and that was pulling Bitcoin down. So what I see when I look at this chart, I'm not looking at Bitcoin in my mind's eye. I'm looking at the VIX spiking up in that particular period of time. And then here, I'm looking at the VIX spiking down. You need to be able to look through your charts. At the moment, it's undoubtedly that the DXY and the VIX are starting to really start to spike. And this is because when you look at the tariffs and what they did when the tariffs were introduced, or they were talked about, the crypto market got hit hard, really, really hard. A lot of people would have been pulled in right at resistance levels. But if you follow the CTKS method, you already know that the resistance was in here. You would be a bit crazy to buy there. You would want to look and observe what was happening at these key retracements. And we definitely have negative structural attraction in play with a structural overshoot likely. People do tend to get really crazy when they see red price action. They say, oh no, this thing's going to go to zero. No, it's going to go down to a gravitational well. That's why you need to know where the structure is. Let's talk about bullish cases and bearish cases. When we saw the VIX spiking up like hell, we had a structural overshoot and we found support between this 91,487 and 91,951 level. And then we rallied, and we rallied like hell. Right now, we've got a structural overshoot of this 98,384 level. Because we're entering a negative CTKS gap, it is likely that we'll get follow through. Why is it likely? Because literally the structure isn't there. If the 96,493 level had a lot of structure in here, that would be fantastic. It would act more like something like this. And thicker and more clustered and more dense is always better. So if we find that we get something like this, that could be on the cards for a bearish scenario. So keeping your eye on the 94,574 and the 93,432 levels are very important. This area is very important to hold. And from a bullish stance, we simply need to get above this 98,384, consolidate around here and just push past the 99,534. Just be aware and always aware that the news is always fear-based. In order to subvert that fear, in order to get rid of it, in order to have courage, you just simply need to know where the safety nets are inside the market. And this is why the CTKS method is so powerful. It can show you exactly where price is likely to reverse from, even if you get a climactic sell down. Please let me know in the comments, where do you think we're headed to? You can just pop in one number in the next 24 hours. And don't forget, everybody's 24 hours is different depending on when they look at the video. And of course, there's no right or wrong answer, there's just learning. And please make sure that you get the cheat sheet. It's absolutely free, but you'll find it incredibly invaluable. And if you reach out to me on LinkedIn, you can directly message me for a partial scholarship to the Profiting from CTKS Method structure course, which goes through the cheat sheet at a level which is absolutely unbelievable. And it will show you how to make money in any market condition, including big sell downs. But there's much, much more to it than that. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.